Protect your car with 3W Liners all-weather floor mats. Made from durable materials like TPE and rubber, our mats are designed to withstand rain, snow, and mud with deep grooves to trap dirt and liquids. For a custom fit and advanced protection, visit 3W Liners. That's the number 3, WLINERS.com today.
Ready to bring your vision to life? At Small Rig, every idea, design, and product is inspired by you, the creator. With our industry-first under co-design mode and the Dream Rig free customization project, we unite with global creators to turn big dreams into reality. Whether it's a cage rig or mount, Small Rig's versatile gear is built to elevate your craft. Small Rig, where your creativity meets our innovation. Go to smallrig.com.
This is a Rogue Media Network podcast.
Welcome back to What's Up Waco, the podcast that loves to introduce you to the people, the places, and the properties that make Waco an excellent community to live. Hey everybody, welcome back to What's Up Waco with your host Erica Boisvert. And today I am joined by Elizabeth Bettis from DNVR Lending. Hey.
Hey.
Hello. How are you today?
I'm good. How are you?
I'm good. I'm chilling. It's foggy and I'm not a fan and I feel really bad that you have no view.
I'm totally disappointed. This is my first time being up in this building and I don't get to see anything.
Welcome to the Alico, where you can see 5 feet in front of your face.
That's okay. It's a beautiful building inside.
It is.
I love
cool,
the
right?
Art Deco. Yes. Very, very cool.
I do too. It's a lot of fun. It's not what I expected, but it's pretty neat.
Yeah.
So thank you.
Wonderful part of Waco.
It is. And the best view on another day.
On another day.
You just come back.
We'll
do this again.
Okay.
All right. So this is a little bit off the norm. You are a business owner. You do run your team. And usually we talk to local business owners. But once in a while, I like to bring it back to our world of real estate because I think it's important and it gives people a full idea of Waco. So you get to learn about Waco, the town, from the people who run it, the business owners, and then we'll get some insights every once in a while. And I know you and I have talked, and I'm just getting so frustrated with mainstream media focusing on, oh my God, interest rates are so high. And it's not insignificant, but it's one piece of a very large puzzle.
Correct.
Right?
Yes.
So I'm hoping we can get into alternatives and things to think about that aren't interest rate driven. There's so many other things that affect your ability to buy a home.
Yes, absolutely.
Okay.
Interest rate is a small piece of the puzzle.
Right?
Yes.
Thank you. And this is a lender, people.
Yeah.
This isn't me just trying to talk you into doing whatever. Like if you want to buy your house, cool. If you want to sell your house, cool. If you don't, also cool. But I think that you need to be equipped with good information.
Yeah, I think, the tough part is that we get fixated on the numbers, but the reality is that we have to decide when we're buying a home, is it time for me to move? Is it time for me to have a house? And if it is the right time for you, then the interest rates and all the other pieces of the puzzle can be adjusted and we can pull levers that allow for you to have a payment that works for you and make the move that you need to make. It has to be about what you need for your life, not about what the numbers are doing, because that's a variable that changes.
Right.
It fluctuates. We can adjust that at any time.
And we have like minimal control over that.
Correct.
And so at the end of the day, if the monthly payment is comfortable for you,
yes,
there you go.
Yep. That's the piece that matters.
Right.
Yeah.
Okay. Very cool. So when people come to you now and they're like, oh, Elizabeth, I can't. Where do you come in and say, okay, but have you thought of this?
So I think the first thing that I'm always looking at is the general overall picture of what their goals are.
Yes.
I look at the payment that they're looking for. I'm looking for realistically why they're moving. What is the need for the move? Do they have anything that we can leverage, like another home? Can we take another home and make it be something that makes their next payment even easier for them?
Okay.
And we're looking at assets and wealth building when you're buying. I want people to move and buy a home because it's going to contribute to their future. And I don't consider myself a one-stop shop when it comes to being a lender. Okay. I'm about lifelong coaching with your home being your asset. And how can I help be a piece of their financial picture? Right. Included with their realtor, included with their CPA, included with their spouse and how they're working their numbers. All those things have to come together and you can't do it all by yourself. I can't even do it by myself, right? You have to have all your team. You got to have your team.
You really
and I'm
do.
a piece of a team
Okay.
that's helping them. So, that's the first thing that I'm doing is, why are you moving?
Why are we doing all this?
Right,
Yeah,
right.
sure.
Do you want to level up? Do you want to buy a bigger house? Do you need to downsize? Are you downsizing because your children have left the home and gone to college? Or, are you looking to be an investor and build a portfolio?
Right.
What is the reason? Are you going to house hack?
Okay.
Are you going to use your house to build up a portfolio or move to the next level? And once I have that answer, then I can really build this creative financing and build the story that works for them. It's not cookie cutter for any one person.
No, agree.
And I think that's something that a lot of people have a misconception about. They think that when they go to the lender's just going to give them their rate. And it's going to tell them, hey, this is the rate, this is what you get, and there's no levers to pull.
You get what you get and don't throw a fit.
Right. And it's so far from the truth. Right. Like,
okay.
There's so much that we can do. And each individual person's scenario is different.
Sure.
So it's like we have to collaborate to find what makes someone feel comfortable in buying a home. And it doesn't have to be a one-stop shop.
Right. No, I think that's so important. And I think it's also really important. I love that you use the word asset, because that is what your home, yes, it's your home and it's your place and it's your thing, but it's also a building that has value, and it will never be net zero. And it is something that you can leverage to build what you want in life. And so that's the real cool part about homeownership. Is what you can do with it after.
Right. I always tell people the first buy is always the hardest buy. After that, things get way easier because you have something that you can leverage.
Yes.
Right?
Oh, I see what you mean. Okay.
Yeah. Your first buy is always harder than the next. The next one, you might be able to sell your house. You might be able to use your home and the equity that's in the home to purchase the next home.
Right.
You may be able to rent that home. There's a lot of different things that you can do with that home. And it becomes that piece of the puzzle that gives you more leverage.
Oh, 100%. And that's why we like to meet with clients face to face, at least annually, and say, okay, this is how your house is performing, because it really is a good place to put your money.
Yes.
And let it grow. And it is definitely long term.
I think
there's ways in the short term as well.
Yes. And there's historical data that shows that the appreciation of a home, even in the highs and lows, is bigger than putting your money into a savings account.
Oh, yeah.
So no matter what, it's a safe bet that is exponential to a savings account, right? Which is where traditionally people think, I'm just going to save my money. Well, why not allow your money to make money for you?
Right.
And that's kind of how I look at housing.
100%. I mean, even in what was last year was kind of a slower year, but I think we still appreciated like 3.5%, somewhere around there, between 3 and 3.5%. So just doing nothing. Just sitting there.
Yep.
And you're living in it and you're using it.
And you would pay rent anyways.
Right.
Right. So why not pay a mortgage and put that money into a savings account for you instead of putting it into somebody else's savings account?
Right. I mean, even a high yield savings account, I don't know. Those percentages might be, I don't know.
Very, very in line, I would say, with appreciation of homes.
Yeah.
The difference is, though, if you're paying for housing, that money goes to housing, and then you're only putting your leftover into that high interest yield savings account, right?
Right.
Like that's, you're only putting a portion in, versus if you put it into a house, your whole mortgage, so that rental payment plus the extra, if you wanted to pay extra, is going to appreciate at that rate.
Yep.
And we all know that appreciation is it's a wonder of the world. It builds on each other, on itself.
It does.
And it's a safety net for most people that I don't think a lot of people realize. And more people have access to it than they realize that they do.
I think that's important too. It's probably the only kind of math that I like.
Yeah.
Because you always at least a little bit better than the year before.
Yeah.
So I think that's good. A lot, we specialize in people who are looking to, it's known as like right sizing now, but leverage your current property in order to find something better. We have people who want to go live the RV lifestyle and just be completely out of the house. We have people who are ready to invest. There are people who need smaller properties because they just want to retire and just be done. And so what are some tricky ways or some tips that you would recommend for leveraging that home and getting to your next step?
Well, I think each one of those scenarios has a different way that you can leverage your property.
Sure.
I think the biggest thing that you can look at is how much equity do you have in your home? Do you sell it or do you leverage it? And the sale is a leverage in itself, right? Because you're pulling the money out of it to be able to put it somewhere else. So maybe you're taking your money out of your home and you're putting it into your RV. You're going to buy cash for an RV, right?
Yeah.
Like that is a leverage point for you if that's what you're doing. I like to coach around on that. Like maybe we don't put it all into the RV. Maybe we do put it into a high interest account.
Okay.
Maybe we do have that money make money for you. And then setting up scenarios to show people that, like, how do we net your best scenario? How do you get the most money out of what you're doing in that scenario?
Yeah.
Right. And then the other piece of it is, and you can probably speak to this more, is how do we remove a contingency? And understanding what a contingency is. I mean,
Right.
I think you can speak to that probably better than I can.
Well, from a lending perspective, I can't, but I know
From a real estate perspective.
But from the
though.
real estate perspective, yes, there are ways to submit offers where you don't have to name your contingency. But that, but then it gets into a little bit of risk management and how risky do you want to be. But I think there's ways that if you love the property that you're moving to, and we can market the heck out of the current property, then in this market, as long as you're okay with the timeline, it'll be done.
It'll be done.
And you don't have to, rely on that sale. A lot of times we partner with the lender to make sure that makes sense on paper.
Yeah.
And couple it and send it with the offer. But yeah.
Well, and I think right now a lot of people think, that their houses are sitting a little bit longer on the market, which is honestly a healthier market.
Oh, I love a balanced market.
Right. We're in a balanced market.
Yeah.
It's so fantastic. It's not one party that's dominating our market. There's real negotiation. There's real conversations around how it benefits the seller and the buyer. And
there's time.
There's
People
time.
don't feel rushed into these decisions.
Yes, which is wonderful. From a lending standpoint, I love that.
Oh,
Give me all the time. You come at me with 20 days and I'm like, okay, hold on, let's go.
Okay, here we go.
But if we have time and we have the ability to really make sure that it's the right fit for someone financially, making sure that the house is of a status that they feel comfortable in, you have time for appropriate inspections, appraisals, all the things that we hope to do for the buyers, and also for a seller to really make sure that they're not being pushed out of their house too quickly, right?
Sure.
Like
they're getting fair market value and all the things.
Yes. We don't have to rush through anything, which is great.
Well, and I love that we're seeing seller concessions come back, which first of all, when I first moved here was mind-boggling to me that sellers would pay closing costs or anything toward buyer expenses, because where I came from, it was almost always a multiple offer market. Yeah. Like that's just Southern California. That's just how it is. And so when I got here and people were, they're doing this much on closing costs. I'm like, what? How ballsy of you to even ask that? Like that? Are you kidding me right now? And then I realized, that's just the market that we were in then. And that was 2018, 2019. And we're coming back to that.
Yes, we are.
I'm seeing a lot of it.
Yeah. So I am able to lend in multiple states. And so I get to see kind of all these different markets, right? And so I get to see really robust markets like Southern California, where that's still the case, right? Multiple offers are still there. Yeah.
It is.
And you look at these pockets throughout the country where that's happening. And then there's other pockets where that's not happening. And I've seen the most success in those markets that are using concessions and using sellers giving a little cash to help the buyer get into a better scenario, specifically around providing opportunities to decrease the payment for the buyer.
Yes.
Because we're using it to leverage rate, whether that's through a temporary buy down or a permanent buy down. And both of those options allow us to get out of this sticky rate that everybody's feeling, right?
Yeah.
We have a little more control. It puts it back in our hands of like, okay, well, you don't like that rate. Let's figure out how to get you into a lower payment and temporary or permanently and make that more comfortable for you. And that comes from those concessions.
And it comes from having time to have those conversations too.
Yes.
Because there's ways to structure it where you're still paying the purchase price that y'all agreed to, but maybe on paper, it's higher. Yeah. But really, because of the concessions, I mean, it's all math and it's all paper and it's all spreadsheets. And you just need to find the structure that works and makes, both sides as happy as possible.
Yeah. I always ask my clients, like I said before, the first question is, what's your ideal payment?
Yeah.
Like, where do you want your monthly payment to be? Because we can get pretty creative to get you to that monthly payment and still get you into that house. It's just how we get there is really kind of where the negotiation and this market is allowing for us to have those conversations to get there. We're not rushing to the finish line saying, sorry, you're going to take that higher payment and we'll figure it out after the fact. We don't have to do that right now.
No.
Yeah. And it's powerful.
It is. And it's very helpful. But speaking to that, sometimes people can settle for that higher rate and wait.
Yeah.
It's a risk
Yeah.
that you hope the rates will come down. But do you offer any kind of programs where somebody in the first 12 or 18 months can refi for free, or is there a way to structure it so they could?
Unfortunately, there's no real such thing as a free
Free.
refinance.
Yeah.
So I think that's something that's kind of like one of those key words. It's like also like, date the rate, marry the house.
Oh,
Like that, those phrases, I just like,
that
not
was like
fun.
nails on chalkboard.
Yeah.
I hated that whole year. Okay.
So I think that's the same thing. There's no such thing as a free refinance, right?
Right.
So I think there's some opportunities that you can refinance
Mhm.
and you can structure your loan in a way that when you go to refinance, you pay the fees then.
That's kind of what I'm sorry. I should have been more clear. So instead of paying like 1 point on the original loan, maybe you pay 1.5 points,
Yes.
knowing that in
Yes.
12 months you can refi without having to pay
Yeah.
closing costs again or whatever.
Yeah.
Okay.
Yeah, or I mean, even taking that higher rate, and
Mhm.
maybe you take that higher rate now, and you get a credit for your rate. Some people out there, some of the investors that are out there, they give you a credit for taking the higher rate because they know that you're going to refinance.
Okay.
So we have as lenders have to look at that and say we're going to take a credit right now, so you're going to have nominal costs right now, but you would have had those costs if we had done it in a normal structured way.
Okay.
Let's hold on to that money. Let's make a little money on it for the next 6 months, hoping that the rates come down. If they don't come down, you've saved that money,
Mm-hmm.
right? You've made a little money on it, and
Okay.
we refinance you anyways, and we get you into a rate that you feel comfortable with.
Okay.
So there's always a fail-safe,
Okay, good.
always a fail-safe, and I think you can minimize the costs of refinances and be strategic around it.
Okay, yeah. I think there's ways to structure that.
Yeah.
So that it doesn't like hit somebody.
Yeah.
But also I think that if you're at the higher rate and you're comfortable,
Yeah.
that's the whole point, right?
Yeah.
That's what we've been saying the whole time. Make sure your monthly payment is comfortable.
Yes.
And if you stay at that high rate or if rates increase,
Mhm.
then no skin off your back. You're still comfortable.
Yep.
Which is what you're looking for.
Yeah. Yeah.
You just want to move in and not be house poor.
Yeah.
Yeah.
Well, and I think that's what good conversations
Mm.
for people that are buying is always asking yourself before you go to your lender, what I want my monthly payment to look like, because you may qualify for way more,
Okay.
and you may qualify for less than what you think you could pay for on a monthly basis.
Sure.
And so really it's about having that conversation with whoever's buying or yourself and saying, what do I feel comfortable with, so that when you get into the lending was part of the process,
Mm-hmm.
that you are actually in a situation that makes sense for you.
100%. Because I even have people who they will qualify for much, much more.
Absolutely.
But then they say, yeah, but we want to pay this.
Right.
So I'm like, all right, there
Yeah.
we go. That's
Yeah.
where we're at.
Yeah.
So I love that you start off with that conversation as well.
Yeah.
It's
It's
too
super important.
Yeah.
Yeah, it's super important. And
It really is.
I think if you throw a number out there that you qualify for this, and it's
Yeah.
like, okay, well, I start looking at those houses, and then you really look at what the monthly payment is that comes
you're
with
like,
that. No, I don't
thank
want
you.
that. Yeah.
No. Yeah.
And sometimes it's like, okay, I can handle that because I know that when I refinance, I'm going to land here.
Mhm.
That's just about being well-versed in what you're doing as a lender and making sure that we are communicating all the different pieces and allowing people to really make decisions around their loans,
Mhm.
not just handing something to them.
Easy Sun has been living fearlessly under the sun since 2016. Born from sailors' need for convenient sun protection, our mineral sunscreen is crafted with natural ingredients offering broad spectrum protection against UVA and UVB rays. Safe for your skin and the environment, stay protected on the go with Easy Sun, your ultimate sun care solution. Visit EasySun.com today. That's EEZYSUN.com. Elevate your experience with Grenco Science, the leaders in cutting-edge vaporizers. Whether you're at home or on the go, our sleek, powerful devices deliver smooth, consistent hits every time. Quality you can trust, innovation you can feel. Grenco Science, take your vapor game to the next level. Visit us at GrencoScience.com.
Well, and that's what and then at DNVR, you're allowed to look at tons of products
Yes.
and see what you're not pigeonholed into specific products, right?
No.
Do you want to talk about that a little? I think people don't realize the different type of lenders that are out there.
There are two different types of lenders, and actually, there's a multitude of different types
Right.
of lenders. But you
But two main, like-
primarily, you're dealing with what's called a correspondent lender, or you're dealing with a broker. I'm a broker, so I get to go directly to the investors and say, I'm going to shop all the different investors to determine what is going to give me the most beneficial loan setup for my client. Now, that may be a conventional loan, an FHA loan, a VA loan. Those are going to be your standard loan types. But you know, if you're a 1-year self-employed borrower, I'm going to go to a different type of investor and look for a product that allows 1 year of self-employed returns.
Right.
I have that option. And those are options that when you're in the correspondent lending world, you have less access to.
Yes.
So those have teams that are built in. They do a lot of stuff in-house. And so they have a different type of advantage because everything is really internalized, where
Right.
I have to have a team that I've brought together to do those pieces for me instead of working for a company that has a team for me.
But
So,
by being a broker, that's where you're able to do the creative financing.
yes, absolutely.
It really opens avenues for you that other people don't
Yeah,
really
and
have access to.
And I have the ability to go out and say, I don't have this product, but I need it. And I can go find it and take advantage of it usually.
Okay.
Versus when you're working kind of in the other lending world or with just even a traditional bank,
Sure.
you don't have that kind of creativity. You kind of get what they give you. And so it has its advantages. Both of them do.
Sure. There's pros and cons to everything.
Everything. Yeah.
But
at DNVR Lending, we have that advantage where we can go out and find the product that is necessary for clients. And in this market, sometimes it's about finding creative products to give someone that monthly payment that they want and still get into the house that feels great, that's the right size, you know?
Yes. And I think that's the most important thing is that people understand they have options. And I wonder when people are ready. And I hate online mortgage calculators because if you know what you're doing and you know what you're looking for and where the manipulations can occur, then cool, use it. 98% of us out there don't know where those things can be moved. And so it's really like the worst navigation tool. I'm so sorry.
No.
Like, just work with a lender and they can specifically answer your questions. It's like when people Google something and they're like, oh, I totally understand this now. Google University. Like, I've got this. But you don't, because experience is the best teacher.
Yeah.
And I just, it's a tool. Like, Credit Karma is a tool, but it's not actually what y'all are even looking at.
No,
like, it's the wrong numbers.
Yeah.
So
I think there's this stigma around contacting a lender, right?
Oh,
Like,
yeah.
a lot of people are afraid to contact a lender, or they're going to pull my credit and they're going to dig in. The truth is we look at people's financials every single day and we have no judgments on what we're looking at. Our job is to facilitate you to the best options that you need. And really, it's important for people to understand, like, we're here to help you. We're not here to make your life difficult, impact your credit score, or any of those things, or spam you. Yes. Okay.
Don't call me 20 times. I think that's a big fear too.
Yes.
They're like, I just don't even want to get into that. But
you get into those mortgage calculators and you get online
Oh
and
my
you start to put your
gosh.
information in, and wham, you're going to get hit.
You're going to get telemarketed to death. But I think it's important to have a conversation with somebody who can answer your specific questions.
Yes.
And get beyond the general, because the general doesn't fit who you are or what you need. And your specific questions, I've tried. I haven't been in real estate for forever, but you can't expect the correct answer just from some vague Google search.
Right. No, you can't. You can't. And everybody's scenarios, I mean, it's a seller and a buyer scenario. It's not just your own, right? Like, you're looking at two different scenarios and how they marry, and they don't converse. It's you and I's job to converse for them. So it's important to have the pullback picture and to really understand what's happening so that we can help someone navigate a purchase that works for them, that's not going to put them into something that's upside down for them later. That's not going to put them at risk, right? My job is to absolutely look at the overall risk of something and assess if it's something that we should lend on, and if it makes sense for someone to protect that person.
Yeah.
Not just to go out there and, start handing out houses, which I wish we could do, but we can't.
That'd be really neat. I can think of some people I would love to give a house to.
Absolutely.
But, yeah, I wish we could. And I think it's important to remember that at the end of the day, you're human and you want to help somebody.
Yeah.
I mean, this is a service industry.
100%.
And
they're not just numbers.
Yeah.
It's not somebody just sitting on the other end of the phone. Like, we really, really want to be collaborative with clients. And when you have that kind of relationship with your lender, it's not scary.
Right.
It's not scary at all.
And
And
it's
they're
not
the
that
first person
spammy
that you
thing to
should
worry
call.
about.
Yeah.
Really? Yeah.
Then they're the first person that you should call, so that they can arm you with the information, so you can go to your agent and be like, okay, here's what I qualify for.
Yep.
This is my comfort zone. This is what we want to buy. Let's go. And then you get to do
Absolutely.
your job really well, because you have the tools and you have the information necessary to help that person.
100%.
Versus the opposite direction, where it's kind of like, well, let's see what you got. And we can't use that online tool. We have to really know what you can buy.
And I like knowing that a lender has looked at financials and that you have a really clear picture of what somebody can truly afford, because the most heartbreaking thing is taking somebody to go look at that $450,000 house. They fall in love and they really can't afford it.
Yeah.
They thought,
Yeah.
based on their math, that they could afford that payment, but we don't take into account our DTI or, just things that we don't as consumers know to look for.
Right.
Right.
Yeah.
And so if somebody comes to me and they're ready, they're like, can we just go look at this? I'm like, first of all, can we sit down and have some coffee and talk this through? Like, what are your goals? What do you need?
Yeah.
But second of all, I don't know your budget.
Yeah.
And I'm one of those people who, I go to the grocery store, I'm adding stuff up in my head as I go down the aisles, because I know what my budget is.
Right.
And that's how you should approach your home purchase too.
Absolutely.
You have to stick to that budget.
Yeah.
Especially if that monthly payment is the most important piece for you.
Yeah. And there's, that monthly payment is an important piece of it, but maybe you have a 5-year goal, and this would inhibit your 5-year goal. Maybe this isn't the right purchase to get you to that place.
That's fair.
And you got to have those conversations too. Like, what's your long-term goal? Where do you want to land? And I just don't think a computer can do that for you.
No.
I think it takes a team to sit behind it and help you.
100%.
So you don't do your taxes typically on your own. You use a service, or even if you do an online service, there's some
still ask you
expertise
some-
behind
yeah.
it. Yeah. So you just got to have expertise behind that before you go out and actually hit the ground running.
Yeah,
And-
absolutely.
And more importantly, I think most people just think, again, that it's just cookie cutter, and it's not.
It's not.
It's not. It's so able to be turned and pushed and leveraged in a way that works for each consumer differently.
Yeah, I love that, because that's why it's just a decent phone call, just a quick little, hey, this is kind of where we're at.
Yeah.
I shouldn't say quick, but
And
at
your
least
home-
get the ball rolling.
Yeah, and your home is the most important thing that I think most people will agree. It's the most important thing that you have, right? Like, it's where you set up your home base. It's where your family is. It's where it's your sanctuary typically. And so it's important to make sure that you're working with a good team to support that purchase, and or even keep you in your home in a way that's working for you. And maybe you have business goals, then you can use your home to leverage for those business goals. There's so many things you can do with your home.
Right. And like, you can even come in, if somebody needed to pull money out of their house to work on their house, like there's other things that your house can be leveraged for. It's not just about selling to buy, or,
There's
a
home
lot of
equity
things.
loans. There's
Yes.
home equity lines of credit. There's, you can do cash out refinances. There's so many different things that you can do to leverage your home.
Are you guys doing a lot of HELOCs?
Yeah.
Okay.
HELOCs are actually something that surprisingly most people think, you wouldn't do a HELOC because of the rates, right?
Right.
But what we look at is your overall debt picture. So you might be paying astronomical amount of interest on your credit cards and consolidating your home equity line.
Yeah. Have you looked at the interest on those?
Right. Like, you're paying 20% over here, or 30% over here. And then, if you do a HELOC, it's even if worst case scenario was a 10% interest rate, like,
Sure.
you know what I mean? If you had some weird thing that got you really high or whatever, then you're cutting your interest in half. You're saving yourself money. So
much.
HELOCs still have a place. And I think loans and cash outs still have a place. Cash outs even more so, because you're consolidating. Yes, you're putting it into your monthly payment with your house, but you're consolidating down into the, the sixes. You're really significantly decreasing your monthly debt load.
Okay.
So we look at the overall, that's when you said debt to
DTI,
debt to income ratio.
Mm-hmm.
Yeah. We're looking at your overall monthly
Right.
expenditure, right? And we can decrease that and make it easier for people and alleviate some of that pressure that's coming from our economy right now. So
Yeah.
it does make sense.
Absolutely. I think I think that's why having a good lender partnership is really important.
Yeah. And that's why I was saying earlier, it's about a lifelong relationship, right?
Right.
It's not like this like short one-time thing that we do. We want to make sure that, hey, I've got this asset. Now what do I do with it? And if you have a need, that you have someone that you can reach out to and be like, okay, I'm running into this, or I have this, or my kid's going to college and I have a ton of equity in my house.
Right.
Can I use it to help pay for their tuition?
Mm-hmm.
Yes.
Mm-hmm. Yes.
Yes, you can. Let's figure out how to do that the right way.
Awesome.
Yeah.
Okay. And then, so I do want to get back. I know we were like, oh, let's stay away from interest rates, but I just want to underscore that there are ways around, just because you Google what the interest rate is today and it's 7.25 or whatever it is today.
Yeah.
That doesn't mean that's what you're going to get.
Right. I mean, the interest rate that you're seeing when you Google is an average interest rate, right?
Yeah.
It's the average.
Mm-hmm.
So it takes into account a very specific credit score normally when they're disclosing that information. If you read the fine print at the very bottom, or if you get something in the mail that says, hey, we can refinance you, you can get this interest rate. I always tell people, like, read the bottom.
Right.
First off, it's most likely spam.
Yeah.
And secondly, there's usually something that accompanies that. You know, maybe you're paying a point. Maybe you're paying to get to that rate.
Mm-hmm.
Maybe you're, you know, the rate on there is for an 800 credit score and you've got a 700 credit score, or vice versa, right? Maybe it's a 700 credit score and you have an 800. What does that mean for you? You're going to get a lower rate? Potentially.
Maybe.
Yeah. So, you know, I just kind of tell people, like, that's just, it's a idea that you can kind of get a grasp on what's happening in the market, but it is not the guarantee for where you're going to land.
Perfect. And there are ways to work it to your advantage.
Yeah. I mean, interest rate is my favorite lever to pull.
Yeah.
Like, I can change someone's monthly payment significantly through interest rate. And there's creative ways to do it that won't impact a buyer without making them bring a ton of money to the table or any of that, right? That scares people. I'm not going to pay all those points. Well, let's talk about the break-even point. Like, let's talk about, like, if we take this, will you make money in 2 years? Will you be in a better situation? Like, there's a lot of conversations that go into getting you to your interest rate.
And if somebody asks and they wanted to look at a permanent buy down, and can you go through what the savings looks like over 30 years versus that chunk that you do have to pay a chunk of money up front, but I think in the long run on the permanent, it's not a wash. I think you come out better.
You do.
Typically,
yeah. I said break even point a minute ago, right? Like, I tell people, if you're going to break even in 2 years, so the amount of money that you spent to get to that rate, if in 2 years you're now in the positive, then you're doing good.
Very well.
That's when you say, yes, this is a good purchase. If it takes you 5-10 years, I don't necessarily think that it makes sense. We might look at, like, a temporary buy down, or we might look at, say, you know, leveraging your money in a different way to accommodate for that payment difference that you're experiencing. Again, back to putting it into a high interest yield savings account, right? Like, does that savings account make you money that makes up for the difference in the payment? And does that make more sense?
Right.
So really, it's looking at the overall picture, right? Like, that's getting into the weeds a little bit on that. But at the same time, it's like, it's got to make sense.
It does.
And it can't be like hey, let's drop 50 grand to get you to the super low rate.
Right.
Because most people don't hold their loans for more than 9 years.
Right.
That's the average amount of time that someone holds their loans. They either sell it or refinance, or they do something with it that causes them to change the terms of their loan. So we're not going to go 30 years down the road. We need to look at the shorter term picture to make sure that we're not spending money we don't need to spend.
Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
This episode is brought to you by LifeLock. During tax season, your personal info travels to a lot of places. Between payroll, your tax consultant, and the IRS. If your W-2 gets exposed, that's just the ticket for identity thieves. That's why LifeLock monitors millions of data points every second. If your identity is stolen, they'll fix it guaranteed or your money back. Don't let identity thieves take you for a ride. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
No, I love that. And I think also it kind of brought up a point in my head when you were talking about down payment. And sometimes people think, oh, I'll just throw more down payment at it. And it doesn't really affect your monthly payment as much, I think, as people assume that it will. Or, you know, it seems like, oh, but if the house is this much less, I mean.
I think sometimes there's like that mental game, right? Where you're just like, it feels better that I have this kind of mortgage, that it's set here. Maybe I'm putting $200,000 down on a $400,000 house and I've got a $200,000 mortgage. That feels better.
Sure.
But I think really you got to look at what is your monthly expenditure and did it really impact it? Can you make money by holding on to that money? Because honestly, in this market, most experts are going to advise you to hold on to some of your money and to not put it all in the house. There's things that you can do after you've purchased your home with that money. If interest rates fall, or if you decide, you know what, I really want that lower payment, you just put a lump sum down payment after you've closed on the home. 6 months down, you pay a very nominal fee and they recast your loan and they drop that payment down. There's so many things that I think we don't think about that we can 100%. Do, right?
Yeah.
And so it's like, you just got to really assess, like, what is your risk tolerance?
Oh, that's a big one.
How tolerant are you? Because if you're not tolerant, then we won't do that.
If you're a little bit nervous, just say no.
Yeah. And that's important, right?
It is very important.
Yeah. Your loan officer isn't driving the bus.
You
are. Yeah. And that's a really fundamental thing that I think a lot of people don't realize. You get to drive the bus. You get to determine how this looks. And if it doesn't work for you, try again, set it up differently. Yeah, like say no. We can do all kinds of different things. So I think those are all kind of important things. And people don't realize that just because you've got a mortgage doesn't mean that later down the road that we can't adjust.
Right. Yeah. You're not, yes, you're tied into it, but you're not tied into it. There are options.
Without even refinancing. You know, there's things you can do without refinancing. You can, to make your payment better. And a lot of times we don't really learn about those things until way down the road, or sometimes
something comes up and you have to ask. Sure.
Yeah. I mean, a lot of clients I've talked to, they're just like, wait, I can do what? It's like, yeah.
Let's go. Which is good. And I think hopefully, if nothing else from our conversation, you've been able to, as a listener, understand that the number one goal would be to have a conversation and put together a game plan and understand that this is collaboration. And you're not just like, this is what you get.
Right.
This is what I will loan to you and this is how this will work. But there are ways to talk through it and make it make sense.
Yes.
For you specifically.
Yes.
You listener.
And also from a listener standpoint, even if you're not buying today and you're buying in a year, don't be afraid to talk to a lender to see what they can do to help you be set up to make it be smooth and easy down the road.
Oh, yeah.
You know?
People are surprised sometimes when they're like, but not, I want to buy, but not for a couple of years. I'm like, awesome. This is a great time to get your game plan.
Yeah. And
go ahead and call that person.
Start having those conversations and figure out. I mean, maybe they'll tell you like, you're good. Keep doing what you're doing.
Yeah.
You know,
or maybe they'll say, you thought you needed to save $1,000 a month and maybe you don't.
Yeah.
Maybe there are other ways to make it work for you.
Right.
So I think I love a game plan.
Yeah. Me too. Me too.
So anytime. I was just talking to somebody the other day and she's like, no, we got a couple years. I'm like, ma'am, call me.
Yeah.
This is a conversation to start now, believe it or not.
Right. And for you, even like maybe there's improvements that are needed on the home, you know, and there's some things that need to be done or they're, you know, to get them to where they want to go. If they're wanting to sell their house in 3 years because again, right, kids going to college or maybe they're having kids and they're going to need a bigger house.
Bigger space. Yeah. We have a bunch of that. Like, I don't know how we just fell into this place where people are leveraging a house we have clients buying a bigger house because they're getting ready to adopt, which is super exciting.
Oh, that's so fun. And
then we have on total other end of the spectrum, we're selling a house because people are ready to go live the RV lifestyle. And then now their neighbor is like, I think our house is too big and we want, you know, less neighbors. We want more land. Yeah. And so, you know, it's really neat to be able to walk people through these scenarios. And I'm learning a lot doing both sides. Yeah. Like it was like over 60% of our business last year. So
was leveraging homes.
Yeah. And so I was like, oh gosh, there's so many things out there that are not readily talked about. And mainstream media is so focused on
Interest rates.
Interest rates.
Interest
like that's
rates.
just one tiny piece of it.
Yeah. And mainstream media is, I feel like, the worst place to be getting your information for when it comes to mortgage lending. Because, again, it's just that cookie cutter. They're looking at that ideal scenario that's being published, right? And it's not
national
the case.
averages. And national averages don't translate very well for Central Texas.
No,
they just don't.
No, they don't.
Especially not Waco. People think of Austin as Central Texas as well. And some of the nationals might work for there, but they don't for here.
Waco, no.
Waco's its own little thing, y'all.
Yeah.
We already know that.
Yeah. And it's great.
Yeah.
Right? And
I love it.
It's great that you when you're in a smaller town, you have the ability to go a little slower and be a little bit more creative, which is fun.
It is. Balanced market. Give it to me all the time. This is my favorite.
Yes.
Okay, so if people are ready to have these conversations, what's the best place to connect with you, the best way?
The best way to reach out to me is probably by email or by phone. So you can reach me on my email at elizabeth@dnvrlending.com.
Okay.
Or you can reach me by phone, which is a out-of-state number, 720-878-3865.
But it's one of the best out-of-state numbers ever, 720 and 303. If you know, you know. So very cool. And I'll have that in the show notes. So if people want to contact you and reach out, then they can. But honestly, key takeaway.
Yeah.
Just have the conversation.
Yeah, have the conversation.
Skip Google. Ignore the news.
Google doesn't know what you have.
No.
So let's talk about what you actually have.
Yeah. Get beyond the Google.
Yeah.
Very cool. Is there anything else that you wanted to talk about today that we didn't touch on? You're so good with your notes. Did you miss anything?
I do have notes. The only other thing is that there's a ton of products out there that people don't realize. So, I think people also, there's cash buy programs. There's so much out there that if you think it's not going to work, again, ask the questions.
Yep.
Whether it's through you or through me, just ask the questions. Because there's a lot of programs that will help you buy and or sell and or qualify to buy. If you don't have money down, there's down payment assistance.
So many.
Right. You don't like your rate, use concessions. There's so many things that you can do on the whole different tiered system of being in a loan that I just think that we don't understand that enough. And we don't talk about it enough, right? We just talk about that, like you said, the rate.
The one easy conversation.
Throw the rate out the door.
Yeah.
Let's talk about the other things.
Yeah. There's so much other things.
Yeah.
So many other things.
Yeah.
So just have the conversation.
Have the conversation.
That's what we want you to walk away with today is talk to somebody.
Yeah.
Talk to a real person
who
can
don't
help
go
you through
online
this. Oh my
and
gosh.
fill out that application. You will be spammed.
Oh, so much by every lender ever.
And if you are doing that, go online and opt out
right
to the pre-screen. That is my little dose of information for anyone out there. Opt out of your pre-screen before you do anything so that you don't get spammed.
Yes. That stuff gets me. Because I Google this stuff. I do.
Yeah.
Because I want to see what people send, like Veterans United is notorious for boom in my email. And so, don't do that to yourself.
No, we get veteran pre-screened deals all the time because
all
we're
the
VA loan users as well. And so, and I can't even tell you how many times I'm like, ooh, let's look at the terms of this one.
Yeah.
And I look down on it and I'm like,
No, that is wrong and very misleading.
Yes.
But anyway, you can avoid all of that by just talking to people directly. Talk to Elizabeth, give me a call. Happy to connect y'all.
Yeah.
But your information will be in the show notes.
Yeah.
And thank you again for being here today.
Of course.
I love that it's an encouraging conversation.
Around
and so,
lending.
yeah. And so if you are in that headspace of, I want to sell to buy, or I'm thinking about buying, or this is something I'm interested in, for 2025 or 2026, reach out. Now is a good time to start that conversation.
Absolutely. Yep.
All right. Well, thank you.
You're welcome. Thank you for having me.
So happy to have you.
Yeah.
And that was Elizabeth with DNVR Lending. And this is What's Up Waco. Have a topic you want to talk about? Do you have questions about Waco, the real estate market, how to sell your house, what to look for when you're buying a home? Send me an email, ericasellstexas@gmail.com. Shoot me a text, 254-447-0180. Happy to chat about it. Find me anywhere you listen to your podcasts or at roguemedianetwork.com.
This has been a Rogue Media Network production.